After a month of sideways consolidation in the stock market, we are finally broken out of our range to the upside. But is this a consistent break, or are we in one of the biggest bull traps that we've ever seen? Guys, this is what we're going to discuss in today's video. We are finally, after a frustrating month, we are finally broken here on the S&P 500 to the upside. But guys, this is not a coincidence. There's some very interesting things that took place last week that took the market higher. I'm going to show you in today's video, guys. We actually had the Fed injecting liquidity into the stock market last week. Hence, the market has headed off higher. But guys, as we've mentioned in last week's video, we have a number of headwinds that are facing us in the next couple of weeks that we need to be aware of, and we're going to discuss those from both a technical and a fundamental analysis in today's video. Guys, if you do enjoy today's video, then please give it a like, and if you are new to our channel, guys, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning, guys. Now let's start off by looking at this graph over here, guys. This chart over here that we have in front of us. This is a chart from the Federal Reserve here, showing the amount of liquidity that's either being drained out of the system or being injected into the system, into the stock market. And as you can see here, guys, at the beginning of the year of 2023, we've had liquidity being injected into the system here, and we also had more liquidity being injected in March when the SVB bank collapsed. Now, as you can see here, guys, we've had liquidity getting drained out of the system from March until the beginning of April, end of April, and then we've had more liquidity being injected back into the system, guys, last week. Hence the big move higher here. Now, guys, when the Fed injects liquidity back into the system, this is not healthy, guys. All this is doing here, guys, is creating, it's like being on life support. This unless you keep doing it forever, is not consistent, and once you start taking liquidity back out of the system, you will see massive shocks, and this is what we predict is going to happen over the next couple of months. The Fed cannot keep injecting liquidity, because as you inject more liquidity, you keep up inflation. Inflation will never go down by you injecting liquidity back into the system. You need to take money out of the system for inflation to go down. And because of this, guys, it's going to cause the Fed is making a big mistake here, and the bubble is going to burst at some point. We believe that the reason they've injected back liquidity last week is because of one of the banks were due to collapse last week. Hence, they had to go and help them out again. But guys, this cannot happen forever. At some point, they will have to take a hit. One of the things I was going to show you guys is this chart over here from Bloomberg. Now, guys, the NASDAQ 100 call volume hit the highest last week since 2014. It seems like everyone is bullish at the moment. Everyone is getting FOMO'd in that this rally can carry on forever and we can go to new all-time highs. Now, we did go to new all-time highs on the DAX in Germany, but it's a different story with Europe and the US. In Europe, they've just started raising rates. Whether in the US, guys, we are almost done with raising rates, and those have to circulate back in the economy. And once they start to take full effect of those rates, they will have a big effect on the stock market there. Now, guys, as it stands, everyone is buying calls. And do we know what happens when everyone is buying calls? The opposite tends to happen. So be very, very careful out there, guys. Now, let's go on and have a look quickly at what happened last week, guys. Last week, we've discussed in our previous video, we were in a massive range and we managed to break out of this range. Now, if we go over to a 1 hour chart, guys, we did discuss this on our Discord channel, but where did we close? We went up over the weekly upper expected move for the week. We went above it. And where did we close the week? We closed the week right on it, guys, right on the upper expected move. So that's why it's very, very important, guys, to have those weekly expected moves on your chart, because it's very difficult and it's very dangerous to go long when the when price goes above the upper expected move, and that's exactly what happened. And if you were playing this from a tactical point of view, we've made a high on Friday morning. We've made a higher high here on negative divergences. We've had a sell signal in place, and we were above the upper expected move. And this should have been the best short you could have taken for that day. And if you did take a short up here, right, and targeted the upper expected move as a take profit, this should have hit quite nicely there and have no problem. So hopefully you took advantage of that, and we did mention that on our Discord community. If you're not part of the Discord community, head over to our website and get your free invitation to join the Discord community. Now guys, before I go into more technical analysis, let's have a look at the economic news for the week. And guys, there's not a lot to discuss this week. On Friday, the 26th of May, we do have more inflation data, so this is something to pay attention on. We do have a couple of small news announcements during the week, but nothing compared to what we have on Friday. So keep an eye on Friday, guys. Remember, we need inflation. Okay, we need inflation to go down. If inflation persists or goes higher, then that will be a negative for the stock market. And what else do we have, guys, that will act as a headwind? We mentioned this in last week's video, but we do have guys, the debt limit, the debt ceiling deadline is approaching. The debt ceiling deadline is the 1st of June, and as of the 22nd of May, they still not have a deal to raise the debt limit. If they carry on like this, the more it approaches the deadline and they haven't got a deal, the news will start hitting the stock market. The VIX will spike, and most likely the equities will take a big hit. So be very, very careful this week. Monitor the debt ceiling news, because this is going to have a major impact. If you don't know what the debt ceiling is, or we want more information about it, we went into a lot of detail about it in last week's video, guys. So if you haven't, go back and watch the last week's video that we've posted on this. Now let's start off by looking at the S&P 500, guys. And in terms of what we're looking out for the week ahead, the S&P 500 has broken out of the range, as we've mentioned previously, and is actually right at the gap here. We've previously discussed that one of the targets could be for price to have a move higher, clear the liquidity above, and for this gap to act as resistance. As long as this gap can act as resistance, guys, we can see a move lower here towards clearing the liquidity and towards the price range of 4,040 or so. If we do go up higher, guys, this is going to be very important here. If we do go up higher, then I can see us going up higher to perhaps the maximum target that we have here, guys. Just to be clear, I don't think price will go above 4,300. We do have the IC here sitting right at 4,300. As long as price goes higher, this would be the target. I don't see us going up higher than that before we have a major pullback. So either this was the top here and we're moving lower from here, or if we do move up higher above this gap here, then I can see us going all the way to this IC here, sitting at around 4,270, and the top will be 4,300. Now, guys, I do have this trend line here for us to be bearish on the S&P 500 for now. I want to see a break of this trend line here on the 8-hour time frame, break either come back to it, a retest, and then a move lower. So this is what you'll be looking for, guys, to turn full bearish. As it stands, if we do go up higher, we may go up higher on negative divergences, and this will be your clue to short the market. Take a note of the upper and the lower expected moves for the week. Now, guys, a couple of things to discuss here. So we have this is the S&P 500. This is the real market. A reason why I believe we may go up higher is that we have a couple of gaps up higher here. So we have a gap sitting at 4,226. So the market may want to fill this in before going lower. And we do have another gap sitting at 4,285. So we do have one last gap sitting at almost 4,400, but I don't think that will happen on this move here. So I think monitor to see if we can fill this gap at 4,226, because if we do, then guys, we have so many gaps. Every alert is a gap here, and we have so many gaps to the downside here. And I believe that as we have more gaps to the downside than we have to the upside, and we used this technique before, price has to go and fill those gaps before moving higher. So I think if we do fill out any gaps this week, it will be this one here at 4,226. Then I expect us to move lower from there. If we do go higher, perhaps on positive debt ceiling news, then the gap here at 4,285 would be the top. I don't think we go higher. We do have that liquidity to be grabbed from there, but I don't think that will happen unless there's something very, very positive that will come out this week. Another argument here, guys, we've discussed this and we've got this so right over the last couple of weeks. We did mention that a target for the market would be for Apple to come in and grab the liquidity sitting around here above the August high. And that's exactly what happened on Friday when the market opened. The market went up higher, clearing the liquidity, and then you had a move lower. As long as this move gets consistent here and the market, Apple, gets dragged lower, then you would take the S&P 500 with it and the other major indices. So monitor this, guys. I don't expect us to go up higher from here. Apple has had quite a run here, has a lot of gaps here to be filled, and it does make sense for it to pull back down here. Again, any positive news that will come on Apple, just watch out for that. But as it stands, this looks ready to move in lower here. It's going up higher on negative divergences here. You can see the market has been going up higher a lot. Now it's finally cleared the liquidity, has no reasons to keep going higher. Now it needs to have a proper pullback. Next, guys, we get the UK 100, and guys, this the UK 100 hasn't done literally nothing over the last week. It's been consolidating here, ready for a big move. What I'm actually noticing here is that the market has been unable to make a higher high here on the weekly time frame, and because of that, as long as the market is not able to have a big move and make a new higher high, this is ready to break lower. So monitor that, guys. But I think on here it looks like, unless if we do close below this daily I see here, we are ready to go lower. Okay, next we get the DAX here. The DAX, guys, taken by my surprise, has gone to all-time highs. Has gone to all-time highs, has broken out of this consolidation here that has been consolidating, ranging sideways for over a month as well, same as the S&P 500, and has managed to go and clear the liquidity and make a new all-time high. Now, how has it done this, guys? It's done this on negative divergences. The market has kept going, it's been going higher, and the breadth has been going lower. So this was a purely manipulation done by the market makers to go and grab that liquidity. Now that liquidity is being grabbed here, guys, as you can see here, the market has made higher highs, higher lows, higher highs, higher lows, and so on. So what we'll be looking for, we're looking for a break of structure, for price on here on the 1 hour to go clear this level here, make a break of structure, and then we'll be looking to tactically get in here, guys. Okay, so there's no point short in this. This still looks bullish. The bread seems to be coming out. Look for a break of structure, then look for price to consolidate and go lower. What do we target here, guys? We'll target this liquidity sitting here at around 15,500. Now, guys, it's not going to make this in one go, so take profits on the way and look for tactical pullbacks higher to get in. Okay, it's not going to make it in one go here. Okay, that's, you can do it, but that's very unlikely to do it. Next we get the US 30 here, guys, and US 30 hasn't done much, okay, just because of the banks have not been doing so well lately, and it doesn't seem that there's a lot of positive news about the banks still. Now what I'm looking for in here, guys, we do have this trend line here sitting on the 8 hours time frames. So as long as we are above it, we are bullish. If we do break below it, guys, watch out for it, because if we do break below it, then I'll be looking for a pullback, a retest, and then for the market to go lower. What do we target, guys? We would target this daily I see here sitting at around 30,500, sorry, 30,500. This would be the ultimate target. The first target, guys, will be this IC here sitting at around 32,500. If we do have a lot of negative news about the banks, or is another bank collapsing, guys, this will be the ultimate target here. But for now, let's target the 32,500. This will be a nice target. We do have plenty of liquidity resting above here, so if we do have some positive debt ceiling news, remember, guys, what we talked last week, if the debt ceiling gets increased, which is very likely to do so, the market may see this as a positive at first, same as it did in 2011, and then we see the big move down, because the only reason they will raise the debt ceiling is for them to agree on a cost cutting program, and that is negative for the stock market. It means investments won't go ahead as they were planning to. So watch that, guys, for this week. If we do go up higher, those liquidity here and above here are targets. See what happens once this liquidity is being grabbed. Do we see a quick reversal down, or is the market willing to go higher? Next we get the NASDAQ here, and guys, the NASDAQ has had a crazy run, clearing the liquidity from the August highs. This is big, guys, and they've done this with around 10 stocks. So the NASDAQ 100 has what, 100 stocks, 100 companies. The 10 companies has led the way here higher, which we talk about the mega caps, Apple, Microsoft, Google, and so on, Nvidia, and so on. Now, guys, we did go up higher. We are in this IPA here, in this daily IPA, and we do have an IC sitting here at around 13,960. Now, guys, we've been going up higher with we had a crazy run here, and we need to digest this move. The market cannot just keep going higher and higher and higher on here on the NASDAQ. We are getting close to, overbought here on the 8 hours, which is quite big. So I do see a pullback here. Now, looking at the 1 hour time frame, guys, here you can see how the market has made higher highs, higher lows, higher highs, higher lows, higher highs, higher highs here, higher lows, and this looks very bullish, guys. So I would look for price to come and break this level. If we do break this level here, guys, this will, at that point, we'll have a break of structure, and if we do see that, then I will look for price to pull back up and tactically get in here. We're very extended here, guys, and it's very unlikely that the market will keep going higher from this point. Do not FOMO in. Don't try to look to buy at those levels, guys. Be very careful on that. Be very, very careful there, guys. Next we get the VIX. Now the VIX has not done a lot lately here, guys. Okay, we've been consolidating here over the last couple of weeks. Now the VIX will spike if there's no agreement on the debt ceiling. We did open the week up with a gap, so look for this gap, whether this gap wants to be filled. We do have another gap sitting at 20 here, guys, with plenty of liquidity resting above those highs here. Can you see? Now what happened on last week? We've had liquidity resting above, liquidity resting below. We had a move lower, perhaps clearing all that liquidity, and the S&P moved up higher on that. Now, are we going to go up higher to clear the liquidity, and then the S&P 500 moving lower? Now, this would be one of the scenarios, guys. So bear that in mind. Be very careful, because if this was a fake move to the downside and the S&P had a fake move to the upside, then what could happen next? I'll let you decide on that. Next, guys, we got the dollar here, and the dollar has been going up higher as we've predicted. I did say, guys, go back and watch it if you don't believe me. A couple of weeks ago, I said the dollar is about to have one of the greatest comebacks. Okay, people were just talking down the dollar when the dollar was down here. I said, no, be very careful. The dollar is about to go higher, and that's exactly what happened. Now, guys, if the dollar keeps going up higher, the S&P 500 will get hit. It seems that the S&P 500 is taking its time now with going lower. And guys, this is because of the liquidity that was being injected in the stock market last week. Now, as that is being drained back out of the system, perhaps in the next coming weeks, it will affect the S&P 500. If the dollar keeps going higher, it will hit the algos, which will cause the stock market to go lower. So be very careful. Watch the dollar. I will expect the dollar to go up and clear that liquidity above those highs here. Obviously, if we do move in lower here, which is it's a possibility, I don't expect it to, but it's also a possibility, that we may see more upside. Remember that 4,300 on the S&P, the ultimate target. Next, guys, we get gold here, and with gold we 100% smashed this. We talked about the negative divergences, we talked about the liquidity being grabbed here on the daily, and then we talked about us moving lower. Now we are moving lower as the dollar gets more strength back into it. I will expect the gold to come and hit our take profit target. We do have a take profit target here, guys, of 1916 or so. This daily IC, this will be the first target, and then we want to see whether we see some consolidation here to go and buy for a target up there. If price goes through this, then we'll look at this next IC here as a potential target. Lastly, guys, we get Bitcoin here, and Bitcoin hasn't done much. It's developing a nice head and shoulders here. So we'll be looking at this level here, whether this level can be broken or not. If we do see a close below this area, guys, this is going to be big, because if we do get a close there, then it means more downside is on the horizon here. If we do get a move up higher, the only level I'm interested is if we are able to go above this level. Remember, guys, we called the top in Bitcoin for 2023 when we are up here. We said this will be the top for Bitcoin for 2023. The NASDAQ has made a new high for 2023, and Bitcoin has been struggling to move here, guys. If the NASDAQ has not been able to push Bitcoin up with it, what does it tell you about when the NASDAQ will get a hit? And you will get a hit at some point, guys. Okay, be very careful out there. That's pretty much it from me, guys. Thank you very much for watching. If you are interested in learning more about the strategies that we use, or would like to take the ultimate scalping masterclass that will be coming out in June, head over to our website mcitradingacademy.co.uk, where you can find out more details about it. Thank you very much, guys, and I hope you have a great trading week.